Welcome back to the Deep Dive. We are diving into India's mutual fund landscape today.
Oh yeah, lots to talk about.
You sent over this Financial Freedom Fraternity YouTube video, and wow, so much to unpack. It's a roundtable discussion with a bunch of industry experts, and they have some strong opinions.
For sure.
So we're going to dive deep into those today.
It's good.
Yeah, there's a lot of buzz around mutual funds in India right now, but
There is.
it's not just about the buzz, is it? We need to understand the underlying factors, the potential risks, and what this means for investors like you.
Absolutely.
One thing that really struck me right away in this video was this whole idea of India transitioning from a nation of savers to a nation of investors.
Interesting.
What do you think about that?
It's a fascinating shift. You know, for a long time, Indians really favored those traditional instruments like fixed deposits and insurance plans. But we are seeing a pretty dramatic change now with more people, especially younger investors, opting for mutual funds.
It's pretty interesting, yeah.
Like GOP Kumar, one of the experts in the video, even said that a lot of first-time investors are just bypassing FDs altogether.
Really? Wow.
It's a pretty big deal.
So it really makes you wonder why this is happening, right?
Yeah.
Is it just about the returns?
Well, I mean,
Like, is that the main thing?
higher potential returns are certainly a draw, you know?
Right.
Especially in an environment where inflation can just eat away at your savings.
Yeah.
But I think it's more nuanced than that.
Okay.
Mahesh Pell, another expert on the round table,
Yeah.
pointed out that the growing trust and transparency in the mutual fund industry is a big factor.
Okay. That makes sense.
You know, India's financial markets have seen their share of scams and scandals in the past.
For sure.
But with regulations tightening and fund houses becoming more transparent, people are starting to feel a lot more confident about investing in mutual funds.
That makes a lot of sense, yeah.
It's not just about returns. It's also about feeling secure that your money is being managed responsibly.
Right, exactly.
So yeah, higher returns and increased trust.
Powerful combination.
Definitely.
But what about this whole, like, India growth story narrative?
Right.
Everyone's talking about it. Does it really hold up?
Well, the India growth story is definitely adding fuel to the fire. India's economy is growing at a rapid pace.
Yeah.
Stock market's hitting record highs. So it's attracting attention from both domestic and international investors.
Yeah, it's exciting, but one of the experts, Vinny, seemed a little cautious about it.
Well, yeah, he brought up a really good point.
Okay.
He said that some of these stellar returns that we've seen recently could be borrowed from the future.
Borrowed from the future.
Yeah, in other words, we need to be realistic about our expectations.
Right.
Understand that markets don't always go up.
Yeah.
This is especially important for those younger investors.
Who maybe haven't experienced a full market cycle yet.
Yeah, who haven't seen the ups and downs.
Exactly.
That's a really crucial point.
Yeah.
We've got to balance the excitement with some realism. Definitely. Speaking of younger investors, we can't ignore the FOMO.
The fear of missing out.
Exactly.
Oh, yeah, that's a big one.
That SEBI report they mentioned in the video is pretty alarming.
Yeah.
91% of individual investors
Wow.
are losing money in derivatives trading.
That's a lot.
Yeah, it's a clear sign that people are making impulsive, FOMO-driven decisions
For sure.
without fully understanding the risks.
Absolutely.
It's like jumping on a moving train without knowing where it's going.
Yeah, and if it's even going to stop where you want it to.
Exactly. It's a good analogy.
Yeah. So it's fantastic that young people are interested in investing.
Definitely.
But they've got to understand the risks.
For sure.
Right.
Absolutely. It highlights the need for more financial literacy.
Totally.
And a shift in how we think about investment advice.
You know, I remember back in the day getting into mutual funds just seemed so complicated.
Yeah.
It was all about filling out forms and understanding all these complex terms and relying heavily on distributors for guidance.
Right. Right.
But things are changing, aren't they?
Definitely. The role of mutual fund distributors is totally evolving.
Okay.
In the past, their focus was really just on explaining the basics and facilitating transactions.
Right.
Now, as Vishal Kapoor pointed out, it's becoming more about hand-holding.
Hand-holding?
Yeah, you know, like educating investors about market cycles and volatility and encouraging a long-term investment mindset.
Well, that's good.
It's a big shift.
And it's interesting how technology is playing a part in all this, too.
Right.
Investing has become so much easier with online platforms and mobile apps.
Oh, yeah. It's almost too easy sometimes.
Too easy.
Well, you know,
Vinny talked about how this ease of access can lead to what he called very short-term behavior.
Very short-term behavior, okay.
Yeah. People are constantly checking their portfolios.
Yeah, all the time.
Reacting to every market fluctuation.
Right.
Making impulsive decisions that can really hurt their long-term returns.
So we've traded patience for instant gratification.
Basically, yeah.
And that's not always a good thing when it comes to investing.
Not at all.
It's like checking your weight every hour instead of focusing on
I like that.
Building those healthy habits over time.
Yeah.
You know,
makes sense.
You might see some fluctuations, but it doesn't really tell you the whole story.
Exactly.
And then there's this whole world of financial influencers.
Oh, yeah, especially on platforms like YouTube.
Yeah.
It adds a whole other layer of complexity to navigate.
Yeah, it's a jungle out there.
Yeah.
You've got these incredibly knowledgeable and experienced people sharing valuable insights. But then you also have those pushing risky strategies or making these unrealistic promises.
Oh, yeah, for sure.
But how do we even know who to trust?
That's the challenge.
Yeah.
Vinny argued for a balanced approach. Oh. On the one hand, we have to regulate misleading information.
Okay.
We have to protect investors from scams.
Right.
But on the other hand, we shouldn't stifle genuine financial education.
Okay.
And we have to recognize the positive role that these qualified influencers can play.
So it's about finding that sweet spot.
Exactly.
Between regulation and education.
Right.
Making sure that people have access to accurate information and guidance without stifling innovation.
Definitely.
Or limiting access to valuable resources.
Absolutely.
This is a perfect segue into our next topic. The future of Indian markets.
Okay. Sounds good.
Where do you think we are headed?
That's the million-dollar question, isn't it?
Yeah.
I mean, we've heard all this talk about stretched valuations, potential global recessions.
Right. Rising interest rates.
Yeah, it's scary.
But then there's also this, like, undeniable optimism about India's long-term growth trajectory.
Yeah, it's tough to reconcile those.
It is. It's a matter of perspective.
Okay.
And focusing on those long-term fundamentals.
Okay.
Both Mahesh and Vishal acknowledged the risks, but they remained pretty optimistic about India's long-term prospects.
Okay, that's good.
They said things like macro stability, robust corporate earnings, strong domestic liquidity.
Yeah.
All those are key drivers of growth.
So we need to kind of look beyond the short-term noise and just have faith in those fundamentals.
Yeah, the underlying economic strength, even when we're facing those global headwinds.
And they didn't dismiss those U.S. Fed rate cuts either.
Oh, right. The ones that had everyone worried about a global recession.
Exactly.
They actually had an interesting perspective on that.
Oh, okay.
They suggested that slower global growth could actually benefit India.
How so? By easing commodity pressure.
Okay.
Which has been a major concern and potentially opening up new investment opportunities.
Interesting.
As global investors kind of start to look for safer havens.
So they're saying it's all about turning potential threats into strategic advantages.
Exactly.
That's really interesting.
Yeah.
And this positive sentiment about India isn't just limited to domestic investors either.
No, not at all.
Right.
Vishal even highlighted initiatives like Gift City, which aims to attract even more foreign investment, especially from NRIs.
So they're really rolling out the red carpet.
They are.
I'm intrigued by this Gift City concept. Can you tell me more about it?
Yeah, it's a really fascinating model.
Okay.
Essentially, it offers tax advantages for NRIs and removes some of those bureaucratic hurdles they face when investing in India.
Oh, like what?
Like the requirement for a PAN card.
Oh, okay.
Mahesh even mentioned that it offers access to a wider range of investment products and services that are tailored specifically for NRIs.
So it's like a one-stop shop.
Yeah, basically.
For NRIs to manage their investments in India.
Yeah.
But let's be real, we can't ignore the elephant in the room.
Okay, what's that?
Those recent changes to the taxation of mutual funds?
Oh, right. Yeah, that's a hot topic.
A lot of debate.
A lot of debate.
About whether these changes will dampen investor enthusiasm or create unnecessary complications.
Right.
What do the experts have to say about that?
Well, Vinny, he really emphasized the need for a stable and moderate tax structure to maintain long-term investor confidence.
Yeah.
He didn't seem too concerned about the recent changes. He kind of suggested that tax tweaks are just part and parcel of the investment landscape.
So basically, don't panic.
Yeah, as long as the changes are reasonable and predictable, investors will adapt.
So it's not just about investor sentiment either.
No.
There are broader economic implications as well.
Absolutely. Vishal made a really good point about that.
Right.
He said that it's super important to have equitable tax treatment across different asset classes.
Oh, that's interesting.
Yeah, it's about creating a level playing field.
Okay.
So that various investment options can compete on their merits rather than just on tax breaks.
That makes sense.
So it ensures fairness and encourages investors to make decisions based on sound financial principles rather than just chasing tax benefits.
Right. We've covered so much ground already.
We have.
But there's still one key voice from the video that we haven't touched on yet.
Oh, who's that?
Hot B.
Oh, right. He joined the discussion a little late.
Yeah.
Hot B, he's a legend in the Indian investment world.
He is. He started off with a powerful statement.
Oh, yeah.
He said, "We, as a country, are at a defining moment."
Wow.
Powerful stuff.
What do you mean by that?
He went on to explain that in his 37 years of observing and investing in the Indian market, he's never seen a more favorable confluence of factors.
Really?
He believes that India is on the cusp of remarkable economic expansion.
So he's basically saying this is an unprecedented opportunity for India.
Yeah, he is.
That's exciting.
It is, but it also kind of raises the question, how do we as investors even begin to wrap our heads around this and figure out how to participate?
That's a great question, and one that we'll definitely delve into in the next part of our deep dive.
It's amazing how much information and insight
I know, right?
we've already unpacked from just one video.
Just from one video.
But the real question is, how do we translate all this knowledge into actionable steps?
Right. What should investors be doing
exactly
to capitalize on this opportunity?
We've got some ideas brewing.
Okay, good.
Stay tuned for part 2, where we'll dive even deeper into the practical implications of all these trends and insights.
Looking forward to it.
Okay, so we're back and still diving deep into the world of Indian mutual funds.
Still going strong.
Before the break, we were talking about this incredible shift happening in India with more and more people moving away from those traditional savings instruments and embracing mutual funds.
It's a big change.
And of course, we can't forget Bot B's bold statement about India being at a defining moment.
Oh, yeah, he was really passionate about
He was. Powerful stuff.
But with all this change happening, how do we even make sense of it all?
Right. Where do we even begin as investors?
Exactly. It's like drinking from a fire hose.
I know. There's so much information out there, especially with all these financial influencers and all this market news coming at us from every direction.
I feel like I'm constantly bombarded.
It can be overwhelming.
Yeah.
That's why I think Vishal Kapoor's insights on the evolving role of mutual fund distributors are so important. Oh, yeah. He was really emphasizing that need for distributors to go beyond just selling products and actually help investors navigate the complexities of the market.
Right, and to build a long-term investment strategy.
Also, they need to be financial therapists.
Exactly. He used the term hand-holding, which I thought was perfect.
Hand-holding, yeah.
Just about understanding the individual investor's goals and anxieties and risk tolerance.
It's a lot more than just picking funds and filling out forms.
Right. Remember he mentioned that the average holding period for equity funds in India is just 2 years.
2 years? That's like no time at all.
I know, right? It's way too short to really benefit from the power of compounding.
It's like planting a seed and digging it up every couple of months to see if it's growing.
That's a great analogy.
You'll never let it blossom that way.
Exactly. He pointed out that it's ironic.
Yeah.
We have access to all these impressive long-term return figures for the Indian market.
Right.
But the average investor just isn't staying invested long enough to actually see those gains.
It all goes back to patience and discipline.
It really does. And that's why having a trusted advisor who can guide you through those ups and downs is so important.
Okay. So it's not just about picking the right funds then.
Yep.
It's also about having the right mindset.
For sure.
And the discipline to stick with your plan even when things get a little bumpy.
Absolutely. You've got to ride out those waves.
But there's another challenge we haven't really talked about yet.
Oh, what's that?
This whole impact of technology.
Oh, yeah.
And the constant access to information that we have now. It's a double-edged sword, isn't it?
It really is. On one hand, it's democratized investing.
Right. Anyone can do it now.
Exactly. You can buy and sell funds from your phone.
So convenient.
But then, as Vinny pointed out, this ease of access can also lead to what he called very short-term behavior.
Very short-term behavior.
Yeah, he was talking about how people are constantly checking their portfolios.
Oh, yeah, like obsessively.
All the time and making all these impulsive decisions based on like the tiniest market movements.
I know. It's tempting to just react to every little thing.
I know, right? It's almost like an addiction.
It is. It's like constantly checking your phone for notifications.
Yeah, you're hoping for that dopamine hit.
You're looking for those likes and those comments.
But it distracts you from what really matters.
Exactly, which is building long-term wealth.
Right.
Through consistent and disciplined investing.
Yeah, you can't get distracted by the noise.
Okay, so we need to be patient.
Yeah.
We need to have discipline. And we need to take a long-term perspective.
Those are the key ingredients.
But then we've got this whole other layer of complexity with all these financial influencers.
Oh, yeah. It can be hard to know who to trust.
Especially with all the conflicting opinions and strategies out there.
It really can. Vinny's suggested a balanced approach.
Okay, what did he say?
He said we need to regulate misleading information.
Okay, to protect investors from scams.
Exactly.
But we shouldn't completely stifle those who are genuinely trying to educate people.
Right, like those qualified financial educators who are trying to empower investors.
So it's about finding that balance.
Yeah, like everything in life, right?
Okay, so we've talked about patience and discipline and the long-term perspective. But let's get back to the big question.
Okay, the million-dollar question.
Where are the Indian markets headed?
Well, that's what everyone wants to know.
Right.
We've heard those concerns about inflated valuations and potential global recessions and rising interest rates.
It's a lot to worry about.
It is, but there's also that undeniable optimism.
Right, about India's long-term growth potential.
It feels like we're at a crossroads.
Yeah, it really does.
So how do we make sense of it all?
Yeah, how do we navigate all these conflicting signals?
Well, I think it comes down to focusing on the fundamentals and understanding that markets are cyclical.
Okay, so ups and downs are normal.
Exactly. Both Mahesh and Vishal acknowledged those risks.
Yeah.
But they remained optimistic about India's long-term prospects.
So they're basically saying to look beyond the short-term noise.
Yeah, and have faith in India's underlying economic strength.
Even when things look a little uncertain globally.
Exactly.
I remember they had an interesting take on those U.S. Fed rate cuts, too.
Oh, yeah, they didn't dismiss them outright.
What'd they say?
They said that slower global growth could actually benefit India by easing commodity pressure.
Which has been a major concern.
A huge concern, and it could potentially open up new investment opportunities.
Interesting.
Because global investors might start looking for safer havens.
That's a good point.
It's all about turning a potential threat into a strategic advantage.
And that positive sentiment about India.
Yeah.
It's not just coming from domestic investors.
Nope. NRIs and foreign investors are feeling it too.
Which brings us back to Gift City.
Right. They're really trying to attract global capital.
It's like they're creating a financial hub specifically for NRIs and foreign investors.
Exactly. Mahesh said that Gift City offers a bunch of benefits. Tax advantages. Simplified procedures. Access to a wider range of investment products and services.
They're really making it easier for NRIs to invest in India.
They are. They're streamlining the whole process.
Okay, so Gift City is a big deal.
Yeah, it's definitely worth keeping an eye on.
But we also can't forget about the impact of those recent tax changes.
Oh, right. The changes to the taxation of mutual funds.
Yeah, everyone's talking about them.
I know, but Vinny had a pretty reassuring perspective on it.
Oh, okay. What did he say?
He said, we need a stable and moderate tax structure to maintain long-term investor confidence.
Right, that makes sense.
He wasn't too concerned about the recent changes.
Oh, okay.
He said that tax tweaks are just a normal part of the investment landscape.
So don't panic.
Basically, as long as the changes are reasonable and predictable.
Investors will adapt.
Exactly.
But it's not just about investor sentiment either.
Right.
There are those broader economic implications to think about.
Absolutely. Vishal made a really good point about that.
What did he say?
He said it's super important to have equitable tax treatment across different asset classes.
Okay, so not favoring one type of investment over another.
Right. It's about creating a level playing field so that different investment options can compete fairly.
Based on their merits rather than just tax break.
Exactly. It fosters fairness.
Right.
And encourages investors to make decisions based on sound financial principles.
That makes a lot of sense.
So it's about creating a healthy and sustainable investment ecosystem.
So it sounds like India is doing a lot of things right.
They are. They're attracting investment and creating a really favorable environment for both domestic and foreign investors.
Okay. But with all this talk about growth and opportunity, it's easy to get caught up in the excitement and forget about the risks.
It is.
So how do we find that balance?
Between optimism and caution.
Yeah, how do we stay grounded?
Well, I think that's where Pot B's wisdom really comes in.
Oh, yeah, he had a lot of good things to say.
He did. Remember, he said that we are at a defining moment.
Yeah, I get chills every time I hear that.
It's a powerful statement.
It is.
He believes that India is on the cusp of something truly special.
Okay.
But he also acknowledged that there will be challenges along the way.
I appreciate that he didn't sugarcoat it.
I know, right? It's refreshing to hear an expert say that the road to success isn't always smooth.
Exactly.
He really emphasized the need to focus on the long term.
Right.
To ride out those market fluctuations. And remember that building wealth takes time and patience and discipline.
Even if he's seen it all.
Yeah.
And his perspective is so valuable.
Yeah, I think he was saying, don't get distracted by the short-term noise.
Okay.
Stay focused on the bigger picture and trust in India's long-term growth story.
That's a perfect way to wrap up part 2 of our deep dive.
I think so, too.
We've explored the trends and challenges and opportunities that are shaping the Indian mutual fund landscape.
We've covered a lot of ground.
But now it's time to get practical. What can investors actually do with all this information?
Right, let's talk strategy.
In part 3, we're going to delve into the actions investors like you can take to capitalize on this incredible moment in India's economic journey.
Sounds good.
All right, welcome back to the deep dive.
We've spent the last 2 parts really getting into the world of Indian mutual funds.
Yeah, it's been quite a journey.
Unpacking all those expert opinions from that Financial Freedom Fraternity video you sent over.
Yeah, lots of great insights in there.
We talked about that shift from saving to investing, the impact of technology, all the optimism around the India growth story.
And those anxieties around tax changes.
Right, but now it's time to get practical.
Okay, let's do it.
What can investors actually do with all this information?
That's the question, isn't it? I mean, we've absorbed all this knowledge.
Right.
But knowledge without action is kind of like a car without an engine.
Okay, I liked it. You're not going to get very far.
So we need to figure out how to put all this knowledge into gear and start moving towards our financial goals.
Exactly. So based on everything we've discussed, I think there are a few key takeaways that can really help guide your investment journey.
Okay, let's hear them.
First, remember what Vishal Kapoor said about patience and having a long-term perspective?
It's so important.
It is. You can't get swayed by those short-term market fluctuations.
Right, and don't even try to time the market.
Don't even try. Remember that 2-year average holding period we talked about?
Oh, yeah.
We need to break free from that.
We do.
Because time in the market beats timing the market.
Every time.
Yeah, it's so tempting to chase those quick returns.
It is.
But history shows us that slow and steady wins the race.
I've heard that before.
And this brings us to our second key takeaway. Diversification.
Okay, that's a big one.
Yeah, Mahesh Pal talked about not putting all your eggs in one basket.
Right, makes sense.
Instead, build a diversified portfolio that aligns with your risk tolerance and your financial goals.
So spread the risk.
Yeah.
Invest across different asset classes, different sectors.
Different geographies even.
Oh, wow. So don't just focus on the latest hot stock or sector.
Nope. Diversification isn't just about reducing risk.
Oh, okay.
It's also about maximizing your potential returns by capturing growth across different areas of the market.
And this is where a qualified financial advisor can really help.
They can. Vinny had a good point about navigating all those financial influencers.
It is hard to know who to trust these days.
It is. A good advisor can be like a mapping compass.
Okay.
When you're exploring that uncharted territory.
Okay, I like that.
They can help you chart your course.
Yeah.
Avoid those pitfalls.
Right.
And stay focused on your destination.
So we need to be patient.
Yeah.
We need to diversify. We need expert guidance.
Yep.
And what was it, that last one?
Never stop learning. Oh, right. Always be learning.
Always.
So those are like our 4 pillars of successful investing.
I like that.
Patience, diversification, expert guidance, continuous learning.
Those are good pillars to build on.
Yeah. And we can't forget Pot B's message.
Oh, yeah.
About India being at a defining moment.
Powerful stuff.
It's inspiring, but it also kind of challenges us.
Yeah.
To think beyond our own personal gain.
Right.
And consider how we can participate in India's economic transformation. I love that.
Yeah. What if we viewed investing as a way to align our financial goals with those broader goals of India's development?
Investing with a sense of purpose.
Exactly.
Think about investing in companies that are contributing to social and economic progress.
That's impact investing.
That's what it's called.
Yeah.
It's gaining a lot of momentum globally.
It is. And with India's vast potential and all this interest from domestic and foreign investors, it could be a really powerful way to create both financial and social returns. So this has been an incredible journey.
It really has.
We explored the complexities of India's mutual fund landscape, the insights from all those experts, and we came out with a clear roadmap.
A roadmap for navigating this exciting world.
And we did it all from just one YouTube video.
Just one video.
It's amazing what you can learn.
I know, right?
When you really dive deep.
You find those golden nuggets.
So as you continue your own investment journey, remember to be patient. Diversify your investments. Seek guidance from those qualified experts. Never stop learning.
Never.
And consider the impact your investments can have on the world around you.
It all matters.
And most importantly, remember Pot B's words.
He was inspiring.
We are at a defining moment.
Embrace it.
Embrace this moment.
Seize the opportunities.
Be a part of India's growth story.
Until next time.
Yeah.
Keep exploring.
Keep learning.
And keep diving deep.